Jeff Jones, our CFO.
Thank you, Chris, and hello again. Now I'll walk through our recently expanded financial targets and summarize the markets, products, and actions Cohu is taking to deliver shareholder value. Fiscal 21 was a strong growth year for Cohu, both financially and competitively, as we secured key customer wins in our semi-test, inspection and metrology, and test interface businesses. Design wins in high-growth segments, coupled with our strong services business and leadership in test automation, was the motivation to expand the target model in mid-December of last year to revenue of $1 billion, delivering EPS of $4 and free cash flow equal to 18% of revenue. Additionally, the target model is based on an organic growth plan over a 3-year time frame from fiscal 21 to fiscal 24. M&A continues to be a part of our strategy and could accelerate achievement of these financial targets. As you've heard from the Cohu team, our strategy for profitable growth is multidimensional, focusing on fast-growing market segments where Cohu can provide differentiated customer value with premium, higher-margin products and services. We've structured Cohu's operating model to be profitable through industry cycles, enabling us to maximize profits and cash as revenue grows. Our priority for capital allocation is reinvestment in the business to support continued growth, and our strong balance sheet also supports potential M&A and returning cash to shareholders through ongoing share repurchases. Cohu has an impressive record of consistent revenue growth over the last 7 years, generated by a combination of organic investments and acquisitions. Removing approximately $27 million of fiscal 21 revenue from the PCB test business we divested in June of last year, we're targeting a CAGR of approximately 7% to achieve revenue of $1 billion over the next 3 years. Cohu's path to this revenue target includes contributions from the 4 growth businesses described earlier. These opportunities are not overly dependent on a particular market segment and are well distributed among our businesses. Semi-test represents the highest value opportunity. However, the test interface and services growth represents stable recurring revenue. The inspection and metrology business delivered significant growth last year, and we believe that our differentiated technology will enable continued expansion supporting customers' needs in advanced packaging. The strategy described today grows revenue contribution from premium, higher-margin products at a faster rate than the automation business. Cohu's revenue has a significant recurring or consumable component that is more stable with gross margins above 50%. Recurring increases as the interface and services business grows and becomes a larger percentage of total revenue. Cohu has also demonstrated a steady track record of gross margin expansion over the last 7 years, yielding 10 points of margin improvement with targets set and repeatedly achieved over time. Gross margin for the first half of 2022 is tracking to 46%, benefiting from growth in premium product sales and lower costs from increased insourcing of contactors. The plan is to expand gross margin to 49% with greater revenue contribution from semi-test, inspection and metrology, and test interface, which will outpace the growth from the automation business. Cohu's priorities for cash generation and capital allocation are investments in technology and product development, consistent and meaningful debt repayment. The Term Loan B has been reduced so far by $265 million, including a $10 million repayment made in Q2. The remaining balance is approximately $85 million. Cash returned to shareholders through a $70 million share repurchase program, of which 550,000 shares have been repurchased through April of this year. Cohu's business is CapEx light. Capital expenditures over the last 3 years have averaged approximately $16 million per year, primarily related to expansion of contactor manufacturing. So why invest in Cohu? Because we've demonstrated the ability to execute our plans, delivering progressively stronger results over the last 7 years. Because we have a strategy to grow revenue to $1 billion and achieve stronger profitability over the next 3 years. We're focusing on high-growth market segments where we provide premium products that help solve customers' increasingly complex test and inspection challenges and improve yield. Cohu's gross margin has grown to 46%, and our plan drives margin to 49%. A richer mix of interface and services revenue will also provide a more stable stream of profitable revenue through industry cycles. We've already demonstrated discipline in managing operating expenses, and increasing profitability strengthens free cash flow that we intend to use for product and technology development, potential M&A, consistent and meaningful debt repayment, and share repurchases. In summary, Cohu is well positioned to capitalize on market opportunities and deliver financial results in line with our target model.